Beyond the Mystery. I'm Barry Rosen with Forecast Market Timing. Here's my contact information, www.forecast.com, and our phone number, and we'll give you this again later. So let me tell you a little bit about myself. I've been operating Forecast Market Timing since 1987, so we're in our 35th year. I can't believe it. I combine cyclical timing with Elliott Wave and Gann. And, you know, when I do long-term investment timing, I'm spending a lot of time looking at monthly charts and weekly chart patterns. I've spoken at many conferences over the decades. I published 3 daily newsletters. One's on financial markets, everything from the S&P and gold to Bitcoin to agricultural markets, and one for ETF traders, which are very common. My ETF timer specializes in commodity sectors. And the Spider X funds, you know, XRE, XLR, XLU, those all those kind of favorite ones that everybody likes. I'm going to take questions at the end, so you can put them in the chat box at the end. Either David or I will field them, but it'd be easier for me to get through all my material if I don't get interrupted. So hold your questions, and we'll be happy to answer them. Here's what I look like. I decided not to share the screen, you know, just give you a larger screen. Okay. Nature of investing. So we're supposed to buy and hold for a long time until retirement. I've attracted in my life more traders than investors. And it seems like these days people don't have a very kind of long buy and hold time, because this conference is about investing. You know, we have to kind of think, what do I buy and hold for a long time until my retirement? Or is that even possible anymore? This is such an unusual decade. That I'm not so sure we can do the normal things that we did. My dad was one of these investors who started buying stocks in the 50s, and you know, he lived we had a little tiny grocery store, and he kept holding and holding and holding, and he eventually retired, you know, with a huge portfolio that was worth a lot, because he just held stuff 50, 60 years through all the corrections. And that's a wonderful thing to do, and it has worked. This is such an unusual decade. We wonder whether we can get away with that anymore. So we have to be very creative this decade to preserve capital, and we'll give you some ideas about that. Now, I do specialize in astrofinance, and JP Morgan of JP Morgan Bank was famous. They say millionaires do not use astrology, billionaires do. And he actually, when he died, he had only $634 million, which was, you know, billions in the 1920s. I did buy some books from his personal astrologer, Evangeline Adams, in the 80s. I'm not going to talk about astrology. I use many other types of astrology, but cycles, you know, the movement of the sun and the moon, a lot of people have correlated that to movements in the markets. And we know that's, you know, very real, you know, but I'm not going to talk much about it. They're, you know, the cycles are kind of, you know, involved many levels. So my accomplishments in Gann and Elliott Wave magazine in 1990, I predicted that, and that's when the market was falling apart after the crash, and people were thinking it was going to crash again. And I said, you know, based on my cycle work, it would, you know, triple in value, and the Dow would go from 2,500 to 7,500 over the next 7 years. And in fact, it did more than that. It went to 10,000. It was a bold prediction at the time, and it was something that I could see in my cycle work. I've predicted the top of the 2000 high in the market, and predicted a 3-year bear market. Then been ranked #1 for gold timing by Timer Digest a number of years, and I've been in the top 5 timers for the stock market many times with Timer Digest over the 35 years, over my 35 years in the industry. One of the issues is that, you know, every day is a new puzzle piece, and every day I do new research. So whatever I say here could change, you know, if the Fed comes out and does something, or NATO declares war with Russia or something like that. Obviously, we're in an X factor time at the moment. So I do publish daily, even my ETF timer. And so if you want to stay in touch with me, we have a special $97 trial for you. And if you just want a sample of it and see what it looks like, you can email us at support@forecast.com, support@forecast.com, and I'll put that back up at the end of the presentation. Okay, so what can we do today? My goal is to look at larger political and economic tendencies and economic cycles in the decade, and predict I also wanted to go about when the current bear market will be ending. I'm going to look at inflation cycles and the impact on the commodity sectors, and that's something that I focus on a lot. And we'll look at long-term monthly charts. So here's a chart of the CRB index, which is an index of I think 15 or 17 major commodities, everything from lumber to grains to, you know, gold and silver and copper and all the things that make up our economy. And as you know, we had kind of super inflation, and the CRB index, this is a monthly chart, topped out in June, and it's been going down. And so even though we're getting horrible PPI and CPI numbers, the actual commodities are starting to come down. And we can see in this chart, projection on this move down is to from 320.29, which we hit in June, to 215, which is about a 1/3 correction. And then the prediction going into 2024 would be that inflation will come back and will go up to 400 again. So this temporary lull that we have with gasoline prices coming down and oil prices coming down and grain prices coming down is not going to go away. You know, lumber, for example, last year hit 1,700. It went down to 454. You know, that's a huge drop. Copper peaked at 504 in March and fell to 313 and projects 260. Copper, of course, is a leading recessionary indicator. Oil peaked at 130 and fell to 90, and then probably will go to 84.50 and even 60 before it's done. And wheat fell from 1358, and then they realized that Ukraine was going to get to export some grain, and it's projecting to 760 and 670. So current trend in the market is actually deflationary, despite the horrible numbers we're getting because of gasoline and transportation costs and food costs. But the commodity index, which is kind of leading us and telling us what we'll be developing, is giving us other information. Here's a projected chart of crude oil futures. We topped out at 130, and we're currently projecting maybe about 84.50. You know, that could even happen into the first week of August. We may get a recovery bounce from there. Could go back to only 92. It could go back up to 100, something like that. And the most bearish projection is it would fall to 61.74 to 57. It doesn't have to go that low, but you know, you can tell how you know, our current administration is, you know, has an election coming up, and they want to get gasoline prices down, and they're going to do everything to make sure that gasoline in November is lower. Usually, our CRB projection in cycles is that they'll peak into April 2024, and, you know, oil could at least be up to $1.60 and maybe $2.35 eventually. So this is not over. And again, the CRB is projecting 400. So we have still massive inflation coming next year and into 2024. And usually it looks like the third week of low might be the earliest deflationary low. Grain prices often bottom, you know, at harvest. There's lesser demand for heating oil and gasoline, and usually in October, and we usually often get a deflationary low, and it looks like that's coming around the third week of October, and that will be a buying opportunity if you're looking for commodity related investments. Again, the thing that's worked this year well was buying commodity related investments. We bought the XLE when it was in the 40s, and it went up to 90, and then we got out, and we haven't gone back in yet because it looks like it's going to go lower. We'll talk about that later. Now, if we look at long-term expansion and contraction cycles going over the decade, we have a kind of a key turning point into April, May 2024. I don't know exactly what's going to happen. I'll speculate about that later in the presentation. But I do specialize in political geoeconomic cycles, and I've been very good at predicting major changes in the economy over the years. In 2017, I was publishing how you know, the whole Bretton Woods agreement would kind of start going out the window, and, you know, obviously China and Russia and the BRICS want to take over the dollar from the U.S. And there were a lot of things that you can start seeing in 2020 as being a major turning point for major economic changes. They're still kind of happening and in flux, but they are all happening. So the next expansion cycle will peak into around July 2026. So my guess when we look at stock market cycles is that if we're going to have another rally in the stock market, it will be from the end of 2023 until July 2026. And that may be the last one of the decade that may be worth kind of playing. And then we have kind of a low into September 2028. It's a social economic low. It's also a movement towards socialism. One of the things that's happening in our world, and you're very aware of it, is there's kind of a world movement towards socialism, quote, communism in the world. And some people are very unhappy with that. I don't want to get political here. But there are a lot of forces that are, at work trying to kind of change the way our world works. And I mean, if you've been following the news in Holland and the Netherlands, the government of Holland passed laws, saying that the farmers could only have so many cows because they were worried about nitrogen pollution and so much fertilizer. And so they're kind of putting the farmers out of business, and they want to take over the farmland there. And Holland has some of the most productive farmland in the world. They produce a huge amount of food. And so this is kind of almost like a communist socialist takeover, and the farmers actually have kind of banded together, and they went to the Capitol, and they threw a bunch of manure on the Capitol steps, and they've been protesting and blocking food delivery because they realize, whoever controls food controls the world, and if you put the farmers out of business and put the food in the hands of government, it's a whole situation. So that this type of things are happening in the world, and you're probably aware of them even in Sri Lanka and other places. They've been kind of passing all these kind of laws. So this stuff is quite interesting for me to look at. The major turning point for the world, looking at longer term world cycles, is to December 2032. I don't know exactly what happens. I'm kind of thinking, we've had there's been points in the history of time where the baton passes from one nation to another. Britain used to lead the world. That baton passed to the United States. China wants to take over leading the world, and they're doing everything in their power to kind of garner favoritism in Africa and other countries. And chances are by 2032 that the baton will pass again. One way to invest in commodities is through commodity ETFs. Most people don't trade commodities, but you can buy ETFs for food. And obviously with wild weather cycles and food shortages, these could be good investments. We bought them last year when we got the first run up. We didn't know about the Ukraine war exactly, but the markets exploded at the Ukraine war, and all these positions which were undervalued made lots of money, and then we got out of them. And we would get back into them probably in October or so when they bought them. So these are easy to remember because they're, the ETF for wheat futures is wheat, WEAT, corn is easy to remember, soybean, SOYBN, and then bale for cotton. And all those had kind of huge moves this year, and they've all come back. So obviously we have to buy low and sell high. And I don't think any of these are done because we have these wild weather cycles and food shortage problems. And the food shortage problems are not going to go away. Energy-related ETFs have been very kind of important this year, and we made a lot of money on XLE, and it's been coming down. We'll take a look at the chart in a minute. Probably we'll get back to 55 or 50 if you're following the XLE. It's currently trading in the low 70s. And it should scoot up again if crude oil is going to go up to 160 or 235. Again, we do have major problems with energy shortages because the green evolution is trying to kind of move us off of fossil fuel and to green electric cars and things like that. And it's a good thing, but it's not a good thing because we're not prepared. We don't have enough lithium to make enough lithium batteries to power all the electric cars. And one of the interesting things that they don't tell you is, well, how do you charge your electric car? Well, if your coal producing power plant is producing electricity to go into your power plant, then you can charge your car. And I don't know, just recently in the Texas heat wave last week, Tesla drivers were informed that they weren't going to be able to charge their cars because the grid had to save power and couldn't supply power to the charging stations. So you can see it's kind of, the electric cars are absolutely wonderful. We don't want the pollution. And at the same time, the reality is we still have to create the electricity somehow, whether that, it seems like we've been behind the times with wind power and solar power. It's just not enough to kind of handle all the needs that our world has. Other energy stocks that ETFs that have a lot of potential. The XOP had a huge run this year for oil exploration. It's been coming down now as the Biden administration is curtailing leasing. I don't think that market is done. One that's worth looking at and still buying now is URA for natural gas stocks. I also like TAN, which are solar panel companies and solar companies. It's projecting 93.50. Uranium, again, as we move to alternative power sources, nuclear power is coming back. The European Union just agreed to consider nuclear power green because they don't have a choice. The other interesting things, to make all these batteries, we need rare earth elements. There's an ETF, Remix, REMEX. It's been really quite volatile, actually. And then lithium, which also goes into powering batteries. Which really interesting is that China manufactures 75% of lithium batteries in the world. They also manufacture 75% of solar panels. So as we move into the green revolution, we're supporting China, and that's another reason probably to invest in China. Their cycles look very good going into the future. Here's a chart of TAN. This is kind of a popular yuppie stock because everybody wants to be involved in solar energy, and it's wonderful. It's been kind of in congestion. I think it will have a chance to get up to 93.50 into September, but again, I'm worried that it's going to hold up there. Again, there is some myth behind all this kind of green power, and eventually it's kind of unraveling. Here's the XLE for energy stocks. It's been on a tear. We were buying it in the 40s here, 45, 40, and it ran up to 90 here, almost doubled. And we got out, getting a little bit too early, but we did make really nice profits on it. It's been coming off, and I don't think it's done. I think, again, if crude oil is going to drop to 84, and I don't know if it's going to go to 60, this ETF, the XLE, will go back to at least 58 to 55 and maybe 50. So we're going to be looking for an opportunity. It's a good long-term investment because, again, it is one of the sectors that, we just need energy, and as much as the world governments want to squash fossil fuel, I mean, it's just not totally possible. Here's natural gas futures. Natural gas have been on a tear. I mean, there were years, if you've watched natural gas, where it would hover between 230 and 240, and 350 or something like that for years. It's been on a tear. You're all aware that there's a huge shortage in Europe, and we can export liquefied natural gas to Europe. And so we do produce a lot of natural gas in the United States, and because of the heat wave currently, natural gas futures had a technical breakout the other day going above $7. And we do think they're going to continue to go higher up to 880 and 9 and eventually 10. And that's going to pull UNG up. So UNG is, if you want to trade natural gas futures are impossible to trade. It's the hardest commodity in the world to trade. They have huge ranges, and you need huge pockets. If you're a utility company, you can trade it, but that's, you're competing with the utility truck. There are mini contracts, but even those are pretty daunting. But UNG is one way to take advance to trade natural gas stocks. We have projections long term into next year up to 41 and 45 and 46. Market was trading in around 27 today when I printed this chart. So it still has a long way to go. I've been rebuying it on the dip. Technically it looks good, and fundamentally it's just not going to fall apart. Given world fundamentals, we need a lot of natural gas to power. A lot of power plants run on natural gas. Fertilizer, which helps grow our crops, is manufactured from natural gas. Europe has a shortage because of the Ukraine. situation in Russia, maybe not supplying enough natural gas to them. So there's just, if we have another hugely cold winter, I mean, they're already, they're doing power saving ventures in Germany, stopping traffic lights at night and telling people not to take hot showers as much to save energy for the winter. Okay, so that's our energy sector. Let's look at stock market cycles. Bear markets usually go about 3 years on average. I mean, 1980 to 1982, 1987 to 1989, 2000 to 2003, 2007 to 2009. And, our bear market really kind of started a little bit earlier, but it really, we just peaked in January. But basically, we're looking at the current bear market to go until October, November of next year. So it's not over yet. And people have been so used to this bull market, you just buy the dips. And as you know, if you've been buying the tech dips, you've been getting killed. And, there are places where it looks like it's bottom, but then it kind of, something comes along, higher rates, gasoline problems, problems with Russia, and the market just tanks. And unfortunately, we just don't see it coming back, in a trending way that you'd want to invest in it until the end of, until October, November 2023. We looked at cycles, and it's kind of interesting. There's an interesting confluence of cycles in October 2023, which kind of matches the crash that we saw in October of 1987. It's almost, it's a little bit uncanny if you look at the types of things that I do. And it combines the 18.5-year cycle and the 12-year cycle with a number of other cycles. And I don't know if that's just kind of a crash finale that we're going to have next year. I don't see the market crashing this year, but people are always kind of looking for these crashes because they make a lot of money. But I think next fall, and we're going to have a kind of a, next year's just a mess, and so this year's a picnic compared to next year. But so we're kind of in this funny period where traditional investing won't work. I mean, if you buy and hold thinking, okay, let's buy Apple phones on dips. We know Apple's got, the most cash in the world of any stock. It's not going to go down that much. And lo and behold, earlier this week, Apple came out and said they're having trouble producing phones, and they're they're going to have some stop hiring and things like that. And Apple went down. It's come back this week, but if you buy these things early, thinking they're eventually going to come back, you have to sit through a drawdown. I mean, look how horrible the drawdown has been in tech stocks this year. If you thought, oh my God, we've all been guilty. I mean, I started buying NVIDIA. On my last show that I was on David's program, I told people NVIDIA was going to 160, and I saw a tradable bottom at 215, and I bought it, and it went up to 230, and then it's crashed again. So you keep, even these kind of bellwethers, like everybody needs chips, they're just bear markets are kind of relentless. So we have to be careful what we buy for long-term investing. And there will be trade. The market can rally in places. We'll look at that. But we're more in a kind of a trading situation than an investing situation. And finding things that you can invest in long term, are tricky. I mean, I like food when it gets overbought. I like natural gas, and I like oil when it gets oversold. I mean, those are good long-term investments. I mean, they're currently coming off like everything else. So short term, we kind of have a lot of volatility going into August 11th. Market short term could get up to 4,100 on the S&P cash. If you've noticed, usually the Monday before the FOMC announcement, the market usually starts falling, and it may recover a little bit into the announcement and then attack. So next week looks down for the stock market. The question is how much does it fall? I mean, if a lot of people think we're going to get a 1% rate hike, if the languaging is saying we're going to do more after that, the market could get freaked out. So I kept looking for 3450 on the S&P cash, and it never quite came in last month. It would not shock me if we got there. If it doesn't happen, we're going to get some type of secondary low. And so I'm even if you're a trader and you're looking to buy the market, we're watching August 11th, rolling into September 18th, and then lower until late October. And but again, I just and there may be places where the market may seem wonderful, when you look at the big charts, what does it mean? I mean, here's a S&P weekly chart. And we topped out at 4,800 last January. We went down to 3,630 or something like that. Now we're currently bouncing, and that bounce, could be a congested bounce that maybe gets up to 4,200 if we're lucky. It's definitely going to get up to 4,100. It may be kind of a congested bounce. I don't, I'm skeptical that we're going to take out 4,200. If we do, I'll rewrite my newsletter. And even if we do, I think this is just, this is still kind of a bear market rally. We do need to go to 3450, and I'm thinking we're going to see 2750 and maybe even lower toward 2100 into next year, and major support at 1775. So next year is a very weird year, and as dicey as things are this year, next year is even messier. So this is summarizing what I'm thinking. Short-term patterns project 4,100 on cash. We want to see the completion to 3450. We will get it at some point, whether it's October, whether it's a reaction to the Fed. We'll eventually into next year see 2750 and maybe even 1775 by the end of the bear market. So the question is, can the market make new highs thereafter? And a lot of LA people are saying, okay, 5,000, 5,500 still possible on the S&P. I think, every day and every month is a new puzzle piece. That's why, you have to keep up with our newsletter. New events happen every day, new research happens. But, for now, I do like the investment period from, the end of next year, October 2023, November 2023 into 2026. So there will be maybe a 2-3 year period. I'm not sure what's going to happen. It may be, whether it's going to be that we're so horribly oversold and we get, just a huge recovery bounce, or that we go to new highs. We just don't know until that rally starts. Here's technology. Again, everybody's, we got so used to technology always going up, and we think, oh, buy the dips in Apple, and anybody who's been buying the dips in any of the technology stocks, you've lost 50, 60, 70%. It is very oversold. We are bouncing now. We're easily going to get up to 132.50. I'm not thinking that we're going to get more. I would still like to see some new lows that never came in at 109 or 106. We just, when you get these Fed announcements and, tech stocks don't like these outlooks, they're very interest rates sensitive. And, as wonderful as this rally has been for tech this week, it's going to give some of it back next week. And if the Fed doesn't say the right things, it's going to give a lot more back. So, I will buy tech. There's a strong cycle for tech, August 11th to September 18th. Maybe it will, we'll have to see where it lands first. But again, we have traders positions. I don't know if we can have investing situations. So this is a summary of what we've been talking about. We have a rally from November 2023 to December 2024, and then again to January 2026. This is best. I've done a lot of over 35 years of research. I've looked at a key 120-year cycle in the stock market, and those cycles often do repeat. And so a lot of these cycles that I've been timing very successfully are connected to this 120-year cycle. And so the equivalent of the cycle high for the decade is January 2026. And so that's the highest I think we'll go, whether that's an absolute new high or a double top, or we'll just have to see what happens over those couple of years. One of the reasons stocks could recover would be that European money pours into the United States. One of the problems is Europe is in a more difficult situation than we are. A lot of the world is in a more difficult situation than the United States. And so what happens if NATO does declare war on Russia, like we had in World War I and World War II, European money will flee to the US. That's a scenario for next year. or for going into 2024. Whether, exactly why the stock market will go up again, we don't know exactly, but we do see we have mass inflation until 2024. Markets can't make profits in that environment. We obviously have, we have NATO that wants to create a world war and pull everybody into it, which is not something that's, war in generally has been good for the markets historically. We don't like to say that. Nobody likes war, but the Depression ended because of World War II, and the economy recovered because of it. I hope we don't go there, but those things do kind of happen cyclically. The bigger problems, and again, we don't exactly know what's going to happen, is, we have deep problems into 2028 and 2030 to 2032. And like I said, there is a movement towards socialism. If the socialists do win, the United Nations has a very kind of socialist agenda. It's not generally not good for the economy, as you know. And it may be necessary because of energy crises, droughts, food crises, that we will have to move into a kind of a socialist world to all help each other. There are people that in the world that think we need to move there and have a one world government. I don't know if those things ever work, and unfortunately, the cycle suggests a movement toward that. So I don't know if it's going to happen. It definitely seems more possible toward the end of the decade. But I am, I think we have some hope, maybe 2024 to 2026. So let's see if the U.S. can pull it out. Political cycles, we've just been talking about that. Socialism and authoritarian cycles have been increasing in the world. We had the COVID crisis, and basically a lot of people got locked in their homes. Some countries were worse than others. Canada, Australia, you couldn't even go 5 kilometers out of your house, and they were monitoring people on their cell phones, and it was quite dictatorial. Talked about the problem in the Netherlands at the moment. There are bills being, there's a huge problem in Sri Lanka. 2 years ago, they outlawed fertilizer, and they've done all kinds of horrible monetary policies. And I was listening to an NPR story, and people were actually have to wait a day in line to get petrol for their motorcycles. A whole day. The line was like a couple kilometers long. There's such shortages, and food had gone up 80%. I mean, we're unhappy about 8% or 10%. Can you imagine if your vegetables are tripling? Their food costs were going up 80%. So the people actually revolted, and they burned down the prime minister's home, and he had to flee. And I don't know, they have an interim government, whether the interim government will help. But basically, we have a lot of messes in the world, politically and economically. We have over 200 or 300 trillion dollars in debt because governments have been fiscally irresponsible. And the only way the governments know how to get out of debt is to eventually have like a debt moratorium. If Europe were to go bankrupt and not pay off their sovereign debt because they have a mess with their pension programs, and they have the negative interest rates, which they have to raise rates today, you're going to have massive revolts. And you can see people revolting. It happened in Sri Lanka already. It's happening in Holland with the farmers just not happy with what's happening. So we're going to have a lot of that next year, and it will continue throughout the decade. And I don't, we don't all know how it's going to end, but you can just see these kind of cycles that are up. And unfortunately, the socialism authoritarian cycles are increasing in the world to 2028. So in the US, there are 5 key cycles. Been watching this April 2024 date for a while. And again, and I don't know exactly what's going to happen in the US. Sometimes these energy points are kind of key points in time where things kind of start unraveling in a different way. One of the things that I'm thinking could happen, the US is quite divided now regionally. We've had the vaxxed and the unvaxxed, and the blue and the reds, and the Dems and the the liberals and whatever division they can, the blacks and the whites, whatever division the media can create, they're creating in the world to create. The Texas legislature, I don't know if it went through, is putting through a bill to succeed from the U.S. You could see how if the U.S. faces default because it's not taking care of its debt, that regions, we would divide, the U.S. would divide into regions. I don't think it's far-fetched to see that happening, and it's something, it's not good. I mean, we're going there. I think people would like, people that want to destroy the U.S. I don't know exactly, how the U.S. is going to get out of it, but we are in quite a mess. Will the U.S. default on its debt? I don't know. We're in a lot better situation than the rest of the world. Japan has been in a mess since the 90s. Europe is in a bigger mess with their negative rates. And now that they're raising them, they're going to have huge problems with their bond market. At some point, the world leaders think the only way they're going to get out of their problems is to default on their debt, and you have these kind of debt resets. It's not far-fetched, and it's something that we have to be aware of. I don't see it happening right away, but it's coming, and it's something to kind of be aware of. President Biden's cycles suggest he's going to start having more major setbacks starting in September. I don't think he's definitely not going to make a second term. I'm not even sure he's going to survive his presidency. There could be health issues. I mean, certainly there are a lot of scandals going on. And you can see if the Republicans take both the House and the Senate, which seems likely that they will try to impeach him. So we have kind of a mess setting up in the US government going into next year. There's a key 120-year cycle in the United States government. So the period from 1895 to 1913 and even 1776 into 1993 are similar periods. Now, there are different things happening here, but this period started in 2015 and runs into 2033. One of the things that happened even in between 1895 and 1913, there was mass immigration from Europe to the U.S. You probably had a lot of grandfathers and grandparents who came over about during those years to the United States because things were problematic in Europe. We're having immigration happening here across the border as bankrupt countries like Venezuela and very poor countries in South America are fleeing to the United States, to starve off poverty. And we have a massive crisis on the border. During those years, we had massive banking crises. We had precious metals crises. There in 1907, there was a huge banking crisis that happened in the U.S. You can see how we're kind of heading into major problems, not right away, but you can just see, for those of you who went through the mortgage crisis, 2009 to 2008, 2009, 2010, you can see a lot of these things kind of repeating in certain ways as interest rates are rising. They put stress tests on banks, but we have like major world events happening. In the 90s, we had major outbreaks of infections like we've had with COVID. I don't think COVID is over. As you know, there's new strains that have come out. They're more infectious, but they're less deadly. And yet they're still kind of pushing, vaccines and boosters, whether they work. As you know, most of you have gotten boosted and vaccinated and you've gotten COVID, they don't work. It's a little bit like the flu virus. They have a new strain of the flu every year, and they make the vaccine out of last year's flu, and it doesn't really work very well. And we're kind of in that situation with COVID and the mutations. The good news is that luckily the outbreaks have been very mild. We get a lot of revolutionary energies. Our country started with revolution against Great Britain. That cycle kind of repeated with a lot of populism and problems with workers in the 1900s, and we're seeing a lot of that happening again. We just the question whether if things get very intense with inflation, and a lot of the other things that are happening in the world. Will we get a lot of revolutionary energy? Again, Texas already is wanting to vote to succeed the United States Union. So again, it's not beyond it happening. The cycle is good for growth of technology. I talked about that in 6 or 7 years ago, and NASDAQ was really hardly trading anywhere when that happened. And we had huge boom in technology, and that boom is not over. So as bad as technology has been punished the last year, it will come back, but I'm not sure I want to buy it until next year. I mean, let's get it really oversold before we buy it. And technology this year is hurt by supply chain problems, and you have new problems coming up. In the 1900s, we had the growth of populism, labor, and higher taxes. Those are things that are happening again. We have major problems with the metals industry. Again, metals were really important in the 1900s. Silver, was king. We had major crises in metals. We have I don't, those of you who've been waiting for metals to take off, we'll talk about that later. It's been kind of a mess. The metals industry has been manipulated by the paper banking industry. You can buy paper puts on metals, and you can keep metals down. And that's been happening. The general cycle that we're in, which is kind of fraught by anxiety and paranoia, which you've noticed, with the, anytime you turn on the news, it's just more, it's been intense since COVID. It's been intense with January 6th nonsense, and it's been intense since then. But this whole anxiety and paranoia it will get better after November 2023. So I think the current ride that we're in seems to bottom into November 2023. It's not like it will get worse and worse. There will be periods where it will seem like it will get better, but I don't think it's quite over. Looking at other countries in the world, there are cycles. Taiwan. Will China invade Taiwan? I don't think this year, and it could happen next year. And the cycle suggests definitely by 2025, and that's a major problem because if the U.S. goes to war with China, that's really quite a major thing. I know people are worried about it. There are all these war games happening. I think maybe at least we have a year to be concerned about it. China, I've never liked China. It's the last country in the world that I would want to visit, but China's cycles look very good into December 2025, particularly starting next February. They're actually having a very kind of golden age, and China's doing amazing things. I mean, they've built amazing. They've again, I'm not a fan at all of Chinese totalitarianism. The way they're treating the Uyghurs, or all the the way they've been locking down their populations, but they have been they are making things work economically. There's still maybe a little ways from bottoming, but they will take off in a big way. So investment in China may work. Again, they do want to take the torch away from the U.S., and they may easily do that. When we look at the FXI, the Chinese 25, it's been projecting. I don't think this is the right chart. This is the S&P. I have the wrong chart in here, but I'm sorry about that. The FXI, for those of you who have chart systems, and I don't have the right chart up, is projecting 24. It's an ETF of Chinese top 25 stocks. It's not quite done, but it will go back to 55. I mean, so I think it's going to be a good long-term investment, but maybe not right away. Russia. Russian cycles they're in kind of a, not for a surprise, the last 7 years since 2016, 2017, they've been in kind of a war and aggression cycle that ends in December 2023. So I don't know if that means they're, I think things are going to kind of continue to kind of pick up, unfortunately, with the Russian war. They're kind of too smart maybe to get dragged into World War III. Ukraine is trying everything to kind of drag NATO into World War III. And, if you are a savvy political reader, you know why. There's a key cycle into January 2023. So if war is going to start with between Russia and NATO, I think we have to watch next winter. I'm hoping we get through that because no one wants to kind of live with nuclear threats and things like that. Of course, Europe's a mess. It doesn't take a rocket scientist to see how European money will flee the U.S. Like it did during World War I and World War II. That may help U.S. stocks at some point. But you could get Russian defaults. We've got the European energy crisis. If you think green is good, look what's happened to Europe. They've been into wind and solar for a long time, and now they don't have enough. And they've shut down their nuclear power plants, and now they can't heat their homes for next winter, and they don't get enough natural gas. So in some ways, the European Union wants to default because it's the only way they can get out of their pension mess. And they want socialism to take over, and you can see where things are headed by looking at Europe. Where do we park money? Well, I don't know. The I bonds, which are giving 9.62%. It used to be that you couldn't get any money on bonds, on government bonds, but the I bonds, you can buy up to $10,000 a year of I bonds and get 9.62%, which will keep you abreast with inflation. But you only put $10,000 into that, and the question is, will the U.S. ever default? Will your bonds ever be worth something? I don't know. I think we could probably get away with I bonds for a year or two, but I worry about the trillions of dollars of debt that the U.S. has been printing and what will happen there. The dollar is a good long-term investment. It's a little bit overbought at the moment. The U.S. dollar index is projecting 119. I think I have a chart of that later in the presentation. Dollar index is about 160.50 now. So that's and so there's an ETF for the dollar UUP. If you're into ETFs, I mean, you can buy straight dollars in terms of currencies. If you're a foreign currency trader, which is very popular in Europe, short euros are obviously going to be the play because the euro is projecting around 90 to 91. It currently was trading at 103 today. So we still have a ways to go. And again, all these are kind of overdone. And so we're going to see a correction into September to invest in. Real estate has always been one of my favorite places to invest, but real estate cycles have topped out also. We're getting a lot of statistics showing that people are pulling out of their mortgages. I think 60,000 people pulled out of their mortgages last month, and they're pulling out of sales because interest rates are going higher. So it doesn't take a rocket scientist to understand this. I would wait for real estate lows into November 2023 and maybe even June 2025. I mean, my ideal play has always been, have your own property in the country with a greenhouse, solar panels, gardening, water resources, and and buy something low, because then you're out of the messes in the cities. Cryptos, everybody's wanting to know about cryptos. Sovereign Man put out a wonderful story about in the 1890s when bicycles took off, there were 190 bicycle companies listed on the London Stock Exchange, and only kind of a few of them survived. And it's kind of like we've got this onslaught of cryptos. We've had 3 or 4 go bankrupt already. Maybe there will be some that will survive and do well. Cryptos have been going down. We told people to get out in November of last year, just about a week after the top. I did see that in the cycles. I bought back in a little bit too early, but I think cryptos could go back down to 13,300. At least we'll get a double bottom in September. One of the ways, when you get these kind of bubble bursts, you sometimes fall 80%. The NASDAQ.com bubble, as somebody pointed out, burst 80%. We often get these 80% falls, and 80% of the fall on Bitcoin would take us down to 13,300, and we don't have a low into September. I mean, it's been coming back a little bit. Maybe it'll get back to 2,800. Maybe it'll even get up to 3,300. You can see this kind of fourth wave peak up here, but it will come down again for a secondary low. So I do think cryptos will come back. I don't know if they're going to make new highs. They could just retrace 62% of this huge fall from, but there'll be some money to make in cryptos. We're looking at a September investment. Metals, Gold and silver are due for cycle highs into September and March. They've been beaten down and manipulated by banks, lots of scandals around inventories. We don't, there's a lot, if you follow the gold market, there's all kinds of huge problems, with metals, and they keep, metals are not a hedge against inflation. We have inflation to 2024. Metals are not going to be the answers. Metals have been kind of a little bit like Charlie Brown and Lucy. Lucy puts out the football, Charlie Brown tries to kick it, and he falls flat on his face. And we've been doing that, buying metals. I think we have a short-term low, maybe even as Monday, 1660 to 1640. We have a high into September. Can it get up to 1880? I'm starting to get more skeptical and thinking that we're going to see 1500 or 1425 before gold is done. In 1987, gold had a huge rally when the stock market crashed. Next year, I think, does look good for gold. Maybe we'll see 2500. But again, the charts do not look great. We talked about currencies already. Okay. So I'm getting to the point where I have just a few minutes for questions. Again, things change daily. You can get a free sample of our ETF timer or a financial timer by emailing us at support@fortucast.com. You can email questions there. You can visit our website at fortucast.com and get a 1-month trial. You need to watch this for a month to see what we can do. Again, things change daily. So thank you, David. Are there any questions in the chat?
I'm not seeing any questions yet.
Okay, so I'm here to take questions. I've got 5 minutes until David has to turn the platform over to our next speaker, Tim. But I do have 3 or 4 minutes to answer questions.
Someone just raised their hand. If you have a question, you need to type it in the chat, please.
I sell, so the question is, do I sell a newsletter or do I sell alerts? I sell a newsletter. It's a daily newsletter. The ETF timer comes out once a day. The financial and the agriculture timers come out twice a day. So I do not sell alerts. I do often put in specific trades in the ETF timer with stops and buying at certain levels. Commodities have gotten so crazy. I do put out specific numbers lately. With a huge volatility, I can't manage people's money, so I put out key numbers and timings, signals, and let people manage their own money. Good question, thank you.